Hello, welcome to Author's Note. There's been violent and fatal unrest on the streets of Venezuelan cities since the weekend when the Socialist Party candidate, Nicolás Maduro, the successor to former President Hugo Chavez, failed to win a resounding victory and almost lost to Henrique Capriles, the opposition candidate who came within a few hundred thousand, just a couple of 100,000 votes of victory. And with me here to discuss the implications of this is Paul Rathbone, a Latin American editor. Paul, thanks very much for joining me. As we can see from our photo, it's a very ugly situation in Caracas and elsewhere. Maduro managed to lose about 1 million or more votes in the weeks leading up to the election. What happened and what's going to happen now?
What's going to happen now? Exclamation mark, question mark, question mark. And what happened is that Nicolás Maduro, who is the son of Chavez, the man that Chavez endorsed in his last public appearance to be his successor, was much less impressive on the stump. He was rambling, incoherent, not in a kind of stupid way. He just didn't make sense, and his lead narrowed from about 10 percentage points to, in the end, only 1.5 percentage points, and the opposition has cried foul.
Right. Now, we've got a couple of charts. Our first one shows the reaction of international investors to the situation over the past few years. We've seen that yields on Venezuela's benchmark sovereign bond were very high, peaking up at nearly 17% at the end of 2011. Since then, since Chavez's cancer was diagnosed about 1.5 years ago, we've had what appears to be much more sanguinity among investors. There's been a bit of a peak over the last day or two since the election. But are investors right to think that the status quo is sustainable and that these yields of sort of 9.5–10% are worth taking?
So Chavez falls ill and yields fall. That's a clear bet. Now we're at possibly a turning point here. The bet, there's a sort of a two-sided bet. The bet is that the new government is going to have to be more pragmatic. And is going to have to sort out the economy, which is really in dire state. And it's the real economy and now also the nominal side of the economy, inflation and monetary aggregates. So they're betting either that things are going to have to get better and be more sensible economic management, or that things are going to get so much worse that it's going to precipitate regime change and then things will get better anyway. But this also has to be understood in the context of sort of zero interest rates everywhere else.
Right, okay. And it's a lot of, it's a lot of carry, isn't it, for what they're assuming is manageable risk.
It's 10%-ish.
Yeah, yeah, pretty good. Now we've got another chart which shows the other side of this equation, if you like, which is what a lot of Venezuelans think about the situation. This is the black market exchange rate between the bolivar and the US dollar, and the official rate, which there has been a devaluation. It's gone up from 4 to, what is it, 6.3, am I right?
Yes.
Yep. But the black market rate, this is recorded monthly on this source. It's actually, over the past few days, gone up to about 26 bolivars to the dollar. What does that tell us about the attitudes of ordinary Venezuelans and doing business in Venezuela when you're an importer and you need to get hold of dollars?
Well, I don't know if it's the attitude of normal Venezuelans. It's just the market making its own judgment. I mean, here is where the ramp up to Chavez's election campaign in October last year starts, and they start pumping out the state money. Right. Inflation starts to rise, and so you get the divergence between the official rate, which is clearly way overvalued. I mean, in terms of locals, you see construction in the Country Club, which is the plushest area of Caracas. So some people, well-to-do people, are betting that things are going to get so bad again that there's going to be change, and so they are in fact investing in a new $1 million home. But all of the prices in Venezuela are starting to look very, very strange. You buy a bottle of water in Caracas which costs 10 bolivars, say, and that's almost $2 at the official rate. But in fact it's less than 50 cents at the black market rate. So prices are all giving all the wrong signals. A
lot of uncertainty. Paul, thanks very much indeed. Plenty to follow on this over the next days and weeks on Beyond BRICS, our emerging markets blog, and elsewhere on FT.com.